Welcome to the Real Money Show, the number 18778 Silver, and the website guildhallwealth.com. My name is Jeremy Wiseman. I'm joined by Jerry Correa, and we're going to be talking about gold and silver. We're going to be talking about the tariffs. We're going to be talking about flows from London to the U.S., flows into the U.S. Mint, and where the prices are headed. Jerry, right now, as we speak, we're recording on Thursday in a period of time that is very much in flux. Things are out of date very quickly, but hey, look, we're trading at $32.75. Eric Sprott was interviewed, I believe, yesterday or the day before, and he said once we break $35, it's really off to the races for silver. Is that right?
He said 33, in fact, so we're just around the corner from $33 U.S. spot price for everything to hit the fan for the short positions, and the LBMA is panicking, and this is why the excitement in silver is, for me, Jeremy, I'm at like a close pinnacle. This is like the coil. You know, silver is a coiled spring. Silver is that Achilles heel to a corrupt financial system, and the corruption is the derivatives market, where the financial weapon of mass destruction, as Warren Buffett called them, are destabilizing the banks, the bonds, and financial health of the system. They represent $1 quadrillion, or 16 times the world's GDP, and the explosion of these derivatives, this toxic time bomb, would likely bring about the bankruptcy of the entire financial system, potentially. And this is coming from one of my online mentors. This is coming from Egon von Greyers.
Egon's great. Egon believes in physical metal. His firm deals only in physical. He's been in business as long as we have, and we agree. If you're going to own physical precious metals, own it. Don't invest in it. Why would you have a counterparty? You're better off owning it directly. Our motto is if you can't hold it, you don't own it. And that includes even if you're storing it at a vault facility.
100%.
Can you go to that vault facility and personally audit your holdings, which is something the United States wants to do. They want to audit their own holdings. And can you hold the bar in your hand? Can you take delivery? These type of things. So, the idea of, if you can't hold it, you don't own it, does ring true, but you don't necessarily want to store $100,000 worth of gold at home. Okay,
not necessarily.
So you do need sometimes you need a third party storage, but what you want to make sure is that it's fully allocated, segregated. You can get your hands on it, you can liquidate it at any time, and that you have the security and insurance that goes along with it. We use Brinks. They've been in business for well over 100 years, and we help clients to hold physical metal in their registered accounts, their RSP, TFSA, Lira, LIF, RIFs. And we really help clients to walk them through the process, help them open the account, help them do transfers, and get the best product into those accounts. Now, they all have to be RSP eligible, of course, but we still want to maintain premium brands at good rates so that clients can be successful. And, Jerry, it is a tenuous time. Just before we got on air, we hear, and it is not a surprise to anyone here in the office, that Trudeau is staying on as Prime Minister to fight the good fight against the tariffs. And, there's a lot of anxiety right now. There's a lot of learning right now. There's a lot of tension and anger. I personally feel the gaslighting that's happening. And we can go into detail, but there is so much opportunity at the same time. So when you're excited about the metals market, it reminds me of just what opportunity we have in the gold and silver market right now. Mm-hmm. Amongst all of this flux of things and volatility, and as you listen to the show today, we're going to be bringing so much information. I hope we get to it all. I was listening to Luke Groman. He's a macroeconomic analyst, founder of the Forest for the Trees. He did a great interview with Tucker Carlson. I know he's not on mainstream media.
He was.
But it's a pretty big podcast to be talking mostly, pretty much solely about gold.
True.
You've got a great article from Ainsley Bullion about the coming crash in the markets. Again, gold is the hedge. Silver is the hedge against the volatility, against geopolitical unrest, looking at the supply-demand fundamentals, but it can also be a solution to a lot of the problems. So when we start to talk about debt, gold can be a big player in solving some of these issues.
Yes, 100%. This is about building a lasting monetary reserve, because stockpiles, reserves are huge topics of conversation. These are keys that people are looking for. Why? What is so special about a reserve? A reserve must be two things: decoupled from the crazy financial madness and the toxic derivatives and your wealth. And secondly, it must be liquid. And that's what makes gold and even silver sought after by major central banks. The moves that are coming from London into New York, it's not just gold. We're just overlooking the silver that is being bought into the country, brought into the U.S., in through the COMEX, and immediately delivered to the U.S. Mint. And we know the U.S. Mint, they were fined for the big boys, the Treasury.
Can you, for those maybe just tuning in or not necessarily paying attention the way we do to the precious metals market, what's going on with the LBMA? We know that a couple weeks ago, talk started happening about auditing the Fed. Trump came out and said, "Hey, did you know we're going to go to the Fort Knox and see if the gold's there?" And they started actively talking about this. And then at the same time, you had all this movement from the LBMA. Give us a very brief synopsis of what that's about.
Well, obviously, gold and silver move in times of economic unrest and even geopolitical unrest. So whether it be war, we don't know if war is around the corner, or if there is an opportunity because the gold and silver will be revalued higher. Look, Ray Dalio warned Trump just the other 2 weeks ago that the U.S. debt problem has to be dealt with immediately. And if you have 36.5 trillion, when we started the year, we were at 36.1 the US was. There is no way of turning it back. As much as we love the unraveling and the uncovering of a lot of corruption and debts and printing and sending money here and there through Doge, and it's being revealed that a lot of Social Security things are being exposed. The debts have to be dealt with. And as we are watching the figures coming from some of our major wholesalers that we deal with one of the four of the largest wholesalers in North America. We've been tracking the numbers, and we're seeing about $120 million worth of gold coming in from London into New York, bought by our wholesalers. That's $120 million worth of gold in a few weeks, Jeremy. It's a lot. But
yeah,
you have over $400 million. 4 times that amount of silver coming through into New York. For what reason? The U.S. Mint certainly seems to think that the future is bright for silver. And Robert Gottlieb, he actually was, he came online. He's a seasoned expert in the precious metals trading industry, over 30 years of experience. He was the head of precious metals trading at Citibank, HSBC managing director of precious metals, JP Morgan managing director of trading.
He's a heavyweight.
He's a heavyweight, and he came out and he talked about silver on the back of Eric Sprott's number of 33, watch out for. In these recent developments, Gottlieb has commented about market conditions, highlighting the scarcity of available stocks in silver, leading to market dislocations. And he tweeted this week, the silver dislocation continues to get worse. The over-the-counter London forwards are the tightest point that we have ever seen, and this is coming from a 30-year vet. If you look at Daniel Galley's from TD's work on free available stock, we are down to approximately 247 million ounces. This really puts us in the danger zone as from his study. Any material withdrawals will only make things much, much tighter and dangerous for the London Bullion Market Association in London. So when we look at this, remember, there isn't a lender of last resort like gold where you can borrow from central banks. You can redeem SLV, they say, but those rates are pretty high already, like the leasing rates. So things are very tight. The paper markets ultimately are being exposed for what they are, unbacked derivatives, while the metals flow out of these institutions that need that physical. So the race is on. The race has been on for quite some time. It's just that the West is just waking up to this, unfortunately.
Yeah, I think the biggest development that we've discovered here is that, we've seen influx into the COMEX in New York for in other times. We saw it during COVID. We saw it at the beginning outbreak in Ukraine. We're seeing it now. This seems bigger in terms of what's happening. It's not just gold. It's also silver. It's put incredible pressure onto the LBMA to deliver. We know that there's been delays. We know that they've tried to, talk those delays away. We know that they've borrowed from central banks to try to fulfill these deliveries. The fact is it's shown that it's a shell game, that there's a lot of paper, and the pressure is immense. And so the market could break much, much higher. Jerry, you mentioned Ray Dalio, and he is known to say, if you don't own gold, you know neither history nor economics. And we're going to get more into that in the next segment as to why governments find gold important, why central banks find it important, and why you should find it important as part of your portfolio as well. You can hold physical gold, physical silver with Guildhall Wealth in a registered account or in a depository account for ease of liquidity, knowing that it's secure, knowing that it's fully insured. And of course, you can buy it direct. And we always recommend that clients start slow, crawl, walk, run, get your feet wet, see what it looks like, see what it feels like. It's different for many people. Even though gold is 6,000 years old, owning some is very new to a lot of people.
It is.
And so start small. Go to our e-store, Guildhall Precious Metals, and you can pick up a tube of silver maples, an ounce of gold. Get started, and then from there you can you will most likely figure out where you want to go next. And we believe that holding it physical, allocated in a registered account, is a great way to protect your savings, and not just your future, but the future of your family as well. The number 1-877-8-SILVER, the website guildhallwealth.com. In a world where there is a lack of trust, where there's geopolitical risks, where there's volatility, gold and silver become a refuge. And they're very simple. They've always been simple. Jerry, we're going to talk about it a little bit, but in the interview with Luke Groman and
that was a good one
Tucker
with
Carlson.
Tucker, yeah.
They started off by just kind of standing back and saying, wow, in a world of AI and digital and all of these great advancements, gold remains essential. Central banks are continuing to buy it because it is real money. And behind all of this digital and all of these great things of our society, you still need real things, right? The U.S. is trying to bring back manufacturing. Real things make the economy work, not just invisible things, but real things.
NFTs?
And even if you're producing new AI components, like new AI structures or all of the things that go behind that, you need to build it.
Yeah.
You need to build it. And that's what they're looking to do in the United States, which leads us to the tariff issues. The tariff issues started off with, hey, there's a fentanyl issue. And for those who have, done the research, you can see, yeah, it's a big problem. It's not only killed Americans, it's killed Canadians more than in Canada, more than died in World War II.
That's right.
That's a major problem. But the government right now doesn't want us to talk about that. They want us to talk about a backlash. They want us to battle back against it rather than talk about the problems, the real problems, and the problems that would bring us to prosperity, which is corruption doesn't breed prosperity.
Not at all.
Creating deals with other countries creates prosperity. We lost the Japan deal. We lost the deal to Germany. Everyone knows we didn't want those deals. We didn't want to sell anything to anybody. I don't know why. So why is now any different? Why is the strategy that they want to employ any different now than what we've seen in the past? I guarantee you right now, Jerry, looking back, if you got your CERB check, would you have rather not received it so that we didn't experience the inflation we've experienced over the last couple of years?
Mm-hmm. Not at all.
Where could these tariffs lead us?
This is going to be a prolonged, this is what Trudeau said. He came out and said that because of the U.S.-Canada trade war, it's going to continue and persist into the foreseeable future. And who knows what that timeline looks like. But that could potentially mean he stays in power. There could be no election. We don't know. But this retaliation.
He's not even saying 2 weeks to
He said
flatten the tariffs.
he did mention that to Trump this week that he doesn't know when the election will be. He's unable to tell you this information. The prime minister or the prorogued prime minister or the person that stepped down can't tell us. Someone else can tell us. Apparently, we don't know who that person is or who those people are.
How did his wife ever get out?
I don't know. It's a good question. But we're choosing to retaliate with tariffs. And Mark Nixon mentioned this week that Trudeau and the NDP are backing indefinite EI payments. So call it like UBI, Universal Basic Income. Instead of growing and working for your family and feeling good about yourself, instead of fixing the economy and cutting taxes, you're willing to cut 1 million jobs. Half of this could be saved by not retaliating, maybe fixing the problem of fentanyl on the border. I mean, the RCMP did write the report back in 2023 that there is a huge problem, and it's a huge booklet. So if you miss this information, you just have your head in the sand. If you don't want to look at Canada's problem and how quickly we can fix it. It's like we're not looking for solutions. We want to fight to do what? Print. Because when we talk about indefinite EI, we're talking about continuous inflation, money printing. Bank of Canada's already bankrupt, and you're going to continue to print on the back of you and your kids' work. So also cut the carbon taxes. You have means to help us out. But you're not going to be doing that. You're not going to take from yourselves. You're going to take from the people. And they'd rather pay you to be unemployed than to let you thrive.
So you think a version of universal basic income is where they might want to take it?
Well, they call it indefinite EI.
They've been doing
Sounds
this
better.
for 8 years. They've done nothing to improve the lot of the country. So why would they want to start right now? So let's be honest. Their patriotism is just a virtue signal, but behind it, they still are looking to destroy the country. And anything where they decide to print more money is just doing exactly that. And anything where they're trying to fight tariffs instead of trying to create deals and make deals. Hey, what can we do? You're right. Yeah, we have this problem. We're going to fix that. Let's make some deals. Let's sell you something. What can we sell you? Right?
And that
is
report
going to
was-
be bad. So look, I think where we're headed with this, I know you have another thing to jump on. I think where we're headed with this is we have potentially more inflation coming our way. And we know that last year gold went up 37% in Canadian dollars. That was not just gold did a fantastic thing and just took off. It's that the dollar tanked.
Right.
You know,
That's
and
exactly
so
what happened.
it did exactly what it needed to do, which was to protect against the falling dollar. So, you know, I don't want to be pessimistic. I think ultimately things are going to be great. I really am very positive. But there's an opportunity to not just protect yourself, but also do well. And I think gold and silver, unfortunately, are going to be the benefactors of this. Mm-hmm. It's like what Rick Rule said. You know, he holds gold not because he wants it to go to 10,000, but he's afraid it is going to go to 10,000. And it's that sort of situation right now.
That's right. And George Bernard Shaw said, you have to choose as a voter between trusting the natural stability of gold and the natural stability of the honesty and intelligence of the members of the government. And with due respect for these gentlemen, I advise you, as long as the capitalist system lasts, to vote for gold. And as long as you vote with history in mind, and with recent history in mind, look, this is a government that decided to freeze bank accounts. This is a government that decided to destroy businesses and to create CERB checks for people that you had to pay back. Inflation was released out, 40-year high inflation. They printed 4 times the size of our Canadian fragile economy. And, you know, we got into the report of the RCMP, and that was a couple of years ago. But just last year, it was the Green Bank that had the largest fine in history for criminal money laundering. It barely made a peep in Canada. No investigations, no criminal charges, no ministers resigned, no probe why Canadian police missed it. Canada is an unlawful cabal, pretty much is what this lady's saying, and everyone is okay with that. And that's what I'm seeing here. Rather than retaliate and go back and forth, deal with the issue, find a solution, get to and nip the problem in the bud. And, you know, retaliations, I think,
are only going to hurt the Canadians. That's the bottom line. They're willing to hurt us for their own egos.
Yeah.
And you don't need to go further than the fact that Trudeau's like, well, I need to stay on. You need me. You need me. I'm going to guide you through these storms that I created.
Yeah, and then storms is what people are seeing, and a lot of economists are preparing for the storms that are coming ahead economically. We have a lot of recession fears and economic warning signs to look at, but you want to get in touch with us before all of these things happen. You want to request your investment guide. Contact us to book a session to discover how precious metals can help your portfolio, whether it be for your IRA, precious metals, RSPs. We are the professionals for that. So be in the know, stay informed, and you need to follow us. Give us a call at 1-877-8-SILVER or visit us at guildhallwealth.com or guildhallpreciousmetals.com and pick up a tube of silver maples. Your kids will love it. But I want to get back to the Ainsley report, Jeremy. This is a really good time to look at what's going on because there's a lot of noise that we're trying to filter through, but there's a lot of flashing signals, and we have to look at these signals to determine the trends. And Ainsley Bullion out of Australia came up with a really good article that really piqued my attention. It's called Timing the Upcoming Market Crash. There's some clear signs, whether you choose to see them or not. Broad-based financial crash is imminent in the West. Timing these cycles can be tricky, of course. It's very tough to pick the bottom and to pick the top. However, using a combination of cycle timing, technical indicators, sentiment readings, tracking leading markets, and observing indicators, we can quite accurately discern the proximity of such event.
What from this article, what is their main thesis as to why a stock market crash is going to happen?
Well, we have three indicators that they pointed out. First one is the technical with the 10 and 2-year yield curve inversion. They've inverted, they've uninverted. They're doing this back and forth. It's called an acceleration. And while they chop around, they did this prior to the great financial crisis of 2007.
It's sort of like a plane that starts dipping and then going up and then dipping and something bad is
just
happening.
Getting sick. Exactly. You're passing out. The current setup is very precarious and one worth keeping an eye on. So we're watching that. The second one is sentiment. It's stressful. It's a sign of stagflation, Jeremy, and this is what we have to be aware of. Some stresses include rising defaults in commercial mortgage-backed securities. It's happening again. Wow. Second, increasing credit card delinquencies. Have you seen the debt? It's over $1 trillion, almost $1.5 trillion in the U.S. alone. What's it like in Canada?
So there's you're not getting an influx of new funds.
No, where's the savings? Those are depleted. We see that. And slow hiring. So the economy is slowing down. Stagflation is slow growth and high inflation.
And it definitely, if you're going to have tariffs, there's going to be layoffs. And what's interesting though is Besant, the new Treasury Secretary, he apparently talked about that the administration wants to focus on Main Street, not Wall Street. Mm-hmm. That Wall Street will be okay, but it's more about Main Street. And interesting you're talking about that because they were in that interview with Luke Groman, which again, I listen to stuff all the time.
You have to.
I listen to stuff every day, different interviews. This one was really good. There was another one with Tom Luongo, Vince Lanci, and Eric Young. Amazing interview. But that was all about the comics LBMA. But they were talking about that if you only have one commodity that you sell, it becomes a problem for you as a country. And the biggest commodity that the U.S. has had to sell is the dollar.
That's right.
So you end up with financialization, which is Wall Street, and that's basically it. So it's not that Wall Street will turn over and that's it. But the good time, the punch bowl is being taken away. It's now, hey, you got to do your work. You got to find the value, find the investors, and get back to doing what you're really supposed to do. And it's sort of like same thing in Saudi Arabia. They have oil. The price of oil drops, they have a big problem.
Very true.
Right? Unless the price of gold goes up.
Then you have no problem at all.
Then you have no problems because you're hedged.
Exactly. So the economic engine is the people. We got to focus on Main Street and the U.S. dollar. This is why they're focused on preparing the potential gold standard revaluation because they're not willing to lose their number one asset and their number one export is the U.S. dollar. The third indicator would be land. So land and stocks continue to rise, but as soon as the land dissects from the trend of the stock market, you're going to expect a turnaround and a decline in the stock market.
You mean like real estate
trend.
prices?
Yes. So this is land, which is the U.S. housing market. So when those decouple, when you see the land decouple from the exuberance of the stock market that continues to rise blindly.
Do they put a number on where the crash could fall to?
Well, they have an 18.6 year cycle peak that marked the crisis in 2007's crash. So if we add 18.6 years on top of 2007, let's do the math, that brings us to 2025, mid-year.
And what kind of pullback are they looking for?
According to their macro downtrend, it's a large systemic crack. Is what they
so
cited.
You definitely look. The bottom line is you want to be hedged. If you've been watching the gold market, you've seen its rise. Jerry, sorry, you want to jump in with that?
Yeah, it's just about bracing ourselves. Like while some try to time this market, you can't do it perfectly. The astute precious metals investors, savers, stackers, squeezers, we understand that gold and silver typically rise in this peak and continue rising in the recovery phase when most other markets like land and stocks struggle to recover. Therefore, getting into the precious metals space provides us with a vehicle to easily navigate both the complacency phase that we're seeing and the recovery phase, both before and after we achieve capital growth, protection, and secured shelter from the storm simultaneously. And if you're even more savvy, like some of us, like you and I, Jeremy, we follow the silver to gold ratio, right? So we follow when is the right time to buy silver and when can we swap into gold. We'll teach you these strategies. You want to get in touch.
The number 18778-SILVER, the website guildhallwealth.com. If you've been watching the prices rise, understand that they're still very much undervalued. In the next segment, we're going to show you just how undervalued gold and silver really are, meaning where they could potentially go in terms of pricing. So that's going to be very exciting. And if you haven't been involved in this market, you could not ask for better reasons right now. Central banks are buying, you're repatriating it into the U.S., you're seeing volatility in the markets and a potential stock market crash. If you have not thought about hedging your portfolio, now is the time to consider it. The number, 18778-SILVER. The website, guildhallwealth.com. Get physical gold and silver in your RSP, TFSA, Lira, LIF. Just give us a call. We'll walk you through it. Fully allocated, fully segregated. That means you get your own serial numbers. Your product is held in your own sub-account at the vault, and you even have access to go and personally audit. I know that clients who are at the RIF stage, Jerry, where they're having to withdraw their funds every year, a lot of them will choose to take out physical product, put it over to a TFSA.
Good move.
Maybe even take delivery of it. We see that sometimes. So it's great to have those options, and I think that it's such a unique vehicle where you actually have ownership of something in your registered account instead of investing and having a third party risk involved. And everything that we're seeing with gold and silver is about hedging risk and creating trust, right? So I wanted to talk about this article, this interview that I watched, specifically because towards the end, Luke Groman, again, a macro economist, analyst, founder of Forest for the Trees. I couldn't believe that they had this interview to begin with. I just thought, wow, what signal? You know, you had Elon Musk asking about auditing the Fed, and it just blew up a Twitter X storm. Then you had Trump come out and say, we're going to go to Fort Knox to see if it's there. You had watching all of the physical product move over from LBMA and the blow up in that in many respects. It hasn't fully blown up yet.
Not yet.
We're still waiting, but it does in some ways look like a default. You know, when you can't deliver right away, you've defaulted.
Failed to deliver.
So it is a quiet default in that way. So, you know, look, they have this interview. Again, they waxed poetic about the fact that there's AI, crypto, biotech, and yet somehow gold still remains essential and it's part of central banks. They haven't abandoned it. Since 2014, they mentioned that there's been a massive shift from U.S. treasuries to gold, with $600 billion worth of gold being purchased. One of the things they talked about, the reason why gold is so important and has always been important, not just from any particular society, but all of them discovering this all at the same time, was this concept of stock to flow ratio, which is the idea that, you know, you hold gold, it doesn't go bad, it doesn't rust, it doesn't grow mold, it sits there. You know, it doesn't go off to market. It literally can stay there as long as you need it to. It's not being consumed. So it's a great way to store wealth. And they do go into the idea of, and something we've talked about, the idea of energy, right? Once you've pulled it out of the ground, who have we had on SRS Rocco report?
Yeah.
He talks about this.
Steve St. Angelo.
You know, you get it out of the ground. There's energy to do that, but once you have it in your hand, that's it. You know, to melt it down and turn it into something else is very low cost. So it's this sense of stored energy is another aspect. But yes, central banks have been buying. They were pointing out the lack of transparency because they read off a list of the top 10 central banks, and I think China wasn't even on the list, or it was super low on the list. Saudi Arabia wasn't on the list, and it's like they're huge on the list, right?
Yes.
So there is a lack of transparency, but I think that that's the idea of potentially an audit.
Yes.
But there's no doubt that China and Russia are stockpiling gold as a hedge against U.S. dollar dependence. And so there's going to need to be a lot of trust put back in the system to fix that.
Absolutely.
So let's talk about the gold holdings that they have, and one of the criteria or metrics that he uses. You know, we've talked a lot about ratios on the show, right? Gold to Dow ratio, housing ratio, to see where gold could go. So what he said is the metric that he uses is gold as a portion of foreign held U.S. debt. So you have U.S. debt. You say, okay, the U.S. debt right now is $36 trillion. A portion of that U.S. debt is held by foreigners, and I think it's something like 8%. And the gold should represent basically enough to cover that, right?
8.
I'm holding your debt. I want to convert that debt to gold. I have to have enough gold on file on hand to pay off the debt.
To pay you off, yeah.
Right? Hey, what have we talked about? Bank of International Settlements, Basel rules. It's a tier 1 asset. It's capital. I need something to pay back the debt.
Right.
Which is why they put the gold in London in the first place.
That's right.
Because we're lending you money, and we need to have this on hand, right? Okay, so this is very interesting. The historic average of gold as a portion of the debt has been 40%, okay? Meaning, on average, U.S. gold reserves could cover 40% of foreign-held debt at market prices. 1989, they said that declined to 20%. During the 79-80 bull market in gold and silver, that went to 135%. Right now, the ratio sits at 9%. So gold is way undervalued
To the debt.
To the debt of foreign held debt. So if you were to revalue the gold on hand at the Treasury, you could get that up to about 14%. But you still have a long way to go to get back to 40. That's not to say that you're not adding to the gold reserves, but you have to get to 40. So they, Tucker Carlson was like, hey, where's the price going? So he said, look, here's a metric that I look. You need to get gold pricing up to a place where it's 40% of foreign held debt. And that would mean that you've got to move up 4 times at least. And when I look at the numbers, that does get that, for me, it puts gold somewhere in the $9,300 price range. And obviously, if you were to put silver as a ratio of that, you're clearly looking at $250 silver. So if gold is trading at $2,900 an ounce now, and you're basically looking at $10,000 an ounce over the next several years, it's not going to happen all at once, then that means silver could also be going to 250 based on metrics like this. And these metrics, what is the point? The point is it's about a level of confidence in the U.S. fiscal stability. That's the idea. Is what is their monetary credibility?
Yeah.
When they couldn't convert in 1971, it was the ultimate insult to their credibility. Sorry, we can't deliver you gold in 1971. We're going to close the window. We're going to default. Well, that's not very credible.
No, you lost.
Right? And that's why countries are buying their own gold, and that's why they're selling off the treasuries. They don't want to hold U.S. debt. So you need to get to a scale like that in order to gain investment and gain credibility and gain trust globally.
Yes. And if you want to be you're stewarding the world's reserve currency, so you have to look like a responsible steward. And in order to do that, the U.S. is on a race to repatriate This is a significant global monetary realignment. This is underway as the international central banks have already proven that they're acquiring for this purpose to value their wealth in ounces versus these dollars that are losing. They're accumulating gold reserves. It's reached a 49-year high. The U.S. is on a race to do rare, and we're going to be involved in something very rare. It's an acronym for repatriation, audit, revaluation, and exponential growth. This is going to be something rare, but it will happen for your portfolio.
And it's so important because if you don't do this, what it signals is a lack of sufficient hard asset backing for the debt. You have an increased risk of inflation, currency devaluation, and massive financial restructuring. Financial restructuring, translation, you're not getting your pension. Okay, that's what financial restructuring looks like. So you want to hedge against that, and that's not the first thing. That's not the first time we've heard about stuff like that.
That's
so
right.
It's very important to consider these things. Look into gold and silver. Contact us. We're happy to talk about the markets. Happy to talk to you about how to get involved and what that looks like. The number 18778 silver. The website guildhallwealth.com. Remember, if you can't hold it, you don't own it. Having it in an allocated, segregated account for your RSP is the best thing that you can do for yourself and for your family. You will get the serial numbers on your personal itemized inventory report. You give us a call, 18778-SILVER. The website, guildhallwealth.com. As we said at the top of the show, there's a lot of confusion, a lot of anxiety, a lot of anger, just a world in flux. And gold and silver do provide a lot of stability. They've done very well over the last several years. And given everything that's happening, supply-demand fundamentals, we were just talking about gold to debt ratios, which, by the way, could be a massive part of the problem. If you revalue the gold and the treasury up to current value, you're going to find $800 billion that you can quickly write a check for. And that goes a long way to paying off debt as well as it continues to revalue. Or it just builds up the asset side of the balance sheet, right? If you can build up the asset side, it does put the debt side into perspective as well. So it can be important and part of the solution in many, many different ways. But we believe it's important to protect your own investments. You have home insurance, life insurance, car insurance. Do you have wealth insurance? Do you have insurance against a stock market crash, as you talked about in the last segment, Jerry? And gold and silver have done that for decades, and they've been part of the monetary system forever, and they will continue to be, even in a world where there's all these new technologies, et cetera. In fact, more technologies, the better. You're going to need more silver because silver is part of all of that. In fact, we've got a headline we're going to talk about shortly about silver and technologies. But, of course, give us a call. We're happy to show you how to do that. 18778-SILVER and the website guildhallwealth.com to get physical gold in your portfolio. But in the last segment, we were talking about a debt ratio and having gold as a means to pay off that debt as a ratio. And you actually had an article at the same time you had pulled.
So interesting. People are echoing the same strategy because it makes a lot of sense. First, it was Jim Riggert who brought the attention to us, brought this to our attention. Luke Groman, economist. Now we have Crescat Capital in their article, Full Faith and Credit of Gold. Crescat's research highlights gold's resurgence as a monetary anchor amid unprecedented U.S. debt levels. Currently, U.S. Treasury gold reserves account for just 2% of outstanding government debt. So his metrics are a little bit different than Luke. Crescat Capital, this is Octavio Costa from Crescat. So only the gold reserves account for just 2% of the debt, one of the lowest ratios in history and dramatically below the 40% backing seen during World War II, as he mentioned. This imbalance creates a compelling case for the gold revaluation, with models suggesting prices of $24,000 per ounce if gold to debt ratios return to 17%, so it's higher, or $55,000 per ounce at 40% coverage. As Rafi Farber pointed out, this is not just gold being repatriated. This is silver being drained at the LBMA. It's not being covered. Not just gold. Over 70 million ounces of silver drained from the LBMA in January. This is continuing. We had 2 more weeks of continuous buying, over $44 million worth through our wholesalers into the U.S. Treasury, into U.S. mints. This is an all-time monthly record, or about 20% of the float. Gold supplies right now are actually steady, according to Rafi. And the MSN media and the mainstream media is fooling us again. They're not telling us about silver. What is so important about silver as we advance technologically?
Well, maybe it's the growth of technology. Maybe it's knowing, hey, if we're going to have to compete for these resources, let's get as much of it into our hands as we can right now. Mexico's doing their best. I mean, too much talked about now, but they're doing their best to control their own supply of silver. You know, Canada was the number one producer of silver back in 1970, 71. We're like 18th now. What's going on? There's so much opportunity for us.
Everybody knows.
And when you think about the future, you think about, look, here's a from High Heat on X, the new Samsung solid-state silver battery for EVs uses about 32 ounces of silver. That's a kilo of silver, but it's a quantum leap from any battery currently available. It means you can charge your car in, I think it's like less than a half an hour, and it will run 600 kilometers or something. It's crazy. Silver is the new oil. And by the way, that means that those producing it in China, if it's in North America and you got to buy it from America or in Canada, or if the price goes sky high, you've got a problem potentially if it's price inelastic. Mm-hmm. Is silver the new oil? That, I don't know. Something to talk about on future episodes.
Both in demand. Let's get that digging, and let's get digging for the silver. Let's get digging for oil. We have the reserves. Canada can be great again, and I think with the new push for resources, we're seeing countries that they're accumulating, stockpiling strategic commodities. China said that this week. This is the global resource squeeze and a global resource war. We can win the race if we just get digging. So get in touch with Guildhall. We want to help you out.
It's a silver lining to everything that's happening right now. The opportunity to get into a commodity that's still very much undervalued. If you want to own physical gold and silver in your registered account, in a depository, fully allocated, segregated, get your serial numbers, access to the product, take delivery whenever you want, go and visit it whenever you want by appointment, and of course just buy it direct. We're more than happy to help you buy it direct, and that's the best place to start. GuildhallPreciousMetals.com. Pick up an ounce of gold, a tube of maples, 10-ounce bar, get started, crawl, walk, run. And if you've missed a show, check us out on YouTube or Rumble. Follow us on X. Thank you so much for joining us this week on The Real Money Show. The number again, 1-877-8-silver, and the website, guildhallwealth.com. This has been The Real Money Show on AM 770 Calgary and AM 640 Toronto.